Dave, can you talk about, from your experience, some of the weaknesses that you've seen in plans?
Yeah, the biggest weakness that we see, especially with new clients that we bring on board, is the timeliness of deposit issue. The rule that is written is that the participant withholdings need to be deposited as soon as the funds can be reasonably segregated from general assets, but in no later case than the 15th of the following month. A lot of plan sponsors will look at the second part of that, in no case later than the 15th of the following month, and they say, okay, well, I have till the 15th of the following month to make the deposit. That's just not accurate. You need to make the deposit as soon as it's reasonably segregable. You can almost think of it as like payroll withholdings or payroll tax withholdings or trust fund taxes. It's the same concept essentially. As soon as you can segregate the money and get it into the plan, you're supposed to do that. That's probably the lowest hanging fruit that's out there as it relates to operational deficiencies in the plan. And the Department of Labor actually has a national initiative where they look at that on every inspection that they do of a plan. So that's one example. There are a host of examples. The definition of compensation is probably another good example of operational deficiencies that we see. And to give you an example, let's say that the plan document says that we're going to base elective deferrals and employer matching contributions based on total compensation. Well, total compensation can include things like bonuses and overtime, but operationally the plan may not be operating that way. They may be excluding those bonuses. It does happen. So anytime there's a situation where the plan document articulates the way a plan is supposed to operate and the plan doesn't operate in that manner, there's an operational deficiency that needs to be corrected.